Hey, what's up, everyone? It is Tuesday, November 28th. A lot to talk about the market. So starting off with S&P 500 today. It's been a pretty wild day. We've had, huge move up and then obviously a move back down for it right here. So starting off right here, we had an inside pitchfork, which is for the what am I looking for here? The triangle trade. So we have one, two, three, four, right here. So once we see that, meaning points 3 and 4 are inside points 1 and 2. Then we just draw the inside pitchfork on there. Levels are the 1, and this one up here is the 5. So then all we look for is for price to break out of the green right here, which had happened right there. So that is where the entry would have been. And since then, price has not gotten up there and hit the 5 line. It got pretty close, but did not hit it. It also did not come and hit this bottom side. If it hits the bottom side, then we would get in. I'm not in this trade, obviously, but you'd get in wherever it hits this bottom side. And then your exit is up closer to where, since this is more of like a 45-degree angle, this downtrend down, you get up somewhere about right up in there. It'd take a little loss in the first contract, but you would get in with double the amounts right here to make sure that you'd make up for it and make some profit on this one and get out probably somewhere right here. Usually it goes up to close to where it broke out right there, but getting out a little bit sooner just to be safe, that's where you'd go for that one. But this is still a left trade right here. I'm going up here to the upside. I'll just put this little arrow right there to signify that is still in play right there for that one. And then we also have potentially, tell you what, let me highlight these over here. Oops. Real quick. So I remind myself about them. Put this on here. There. All right, cool. So then we also have another one right here. See, we have 1, 2, 3, 4. I'll take this off there. And what this is going to do is we're looking for a short setup right here. On the downside, signify we look for a short setup here for the inside pitchfork trade. So using the second, third, and fourth point right there. Here's how this one worked out. So we had a close down here. That's where the initial entry would have been. I personally don't try to get there when I do take these trades where the breakout is, where the close is. I wait till it gets closer. For the most part, it at least pulls back some here a little bit so you can get in at a little bit better price. I haven't really seen it too often just zoom all the way down to it. Of course, it will happen, but for the most part, you can get in a little bit better, look for retracement. So price traced back up to it, no big deal. Came back down, got real close to hitting the 5 line right here. I probably need to make that a different color for it back. I think I'm going to do that now. This much, huh? No big deal. And so almost hit, but did not. But then look what happens. It came back up and hit the other side of it right there. So once it hits the other side, the safe play would have had your exit, somewhere like right around here. Obviously, that didn't happen. Look what happens. It goes off the other way. So you're thinking, oh man, this is screwed now. It's going completely up the other way, but then the price comes back down all the way down to where the original entry level was. And that's another reason why I don't get in where the original entry level is. I wait to get closer to the green line. Like, so say you waited and you got in, right here on this candle, right about there, and just say right around there. So then you get in right there at that one right there. Well, now you don't have, instead of trying to make up for it, taking your exit down here at 6.25 for a loss right there, you're looking at something more like 4 right there. So then for this one right here, get in, you have your exit down somewhere like there, that's 6.25. So even just one contract, you make a good profit, and then 2 contracts, you make an even better profit over there. So that's why it's so important is for the entry, not getting in, especially when this candle breaks out a ton, wait for the pullback, get in. So if price does go against you and you have to get in here, getting up your exit at a safer level, like say you would have had it, right around here. To be honest, if I was in this trade, I probably would have missed it because I probably would have had my exit like right around here, and then it goes away from you, but it does come back, within 15, 30, 45, 60. We start getting that pullback within 15, 30, 45, an hour, start getting that pullback and goes down there and hits it. But that's how that trade works when price goes against you and doesn't hit it right there. So that one is done. But then also we have over here, what was it? I thought we had one other one. Is that one? That was that one. Don't need these over there anymore. There's another chart. I thought we had an expanding triangle trade on this one. Yeah, we have a potential expanding triangle. So using these semaphores, green, and orange and a red one in there. So whenever the next semaphore forms, it should be up here. How we do it for expanding is we use the first 3 points, and there's not even a fourth one in there yet so far. So these are the first 3 points right here, 1, 2, 3, and then the fourth one will eventually form right up here, because you can see this doesn't happen live. The semaphore indicators, they go after the fact. So candles have to form, and then the semaphore will get painted on there. So if you're thinking that you can just when the semaphore forms, we know whatever color. Green's the lightest color, then it goes orange is second, and the red one are the heavier ones. You give more weight to those. So to have an orange, you have to have a green, and to have a red, you have to have an orange, then you have to have a green inside of it. But whenever the price, if it does come down and close below this red line, the median line right here, that would signify we're looking to get in that trade. The next it is down here to the yellow line. But we also have in here as well is we have a bunch of retracement trades that we're looking at getting into for it. In fact, I missed one earlier today. Wish I was paying attention to it, but I wasn't. Where was it? Was this it? Yeah, that was it right there. So looking at that, looking at that retracement trade right there. Or was it right here? That's not it. Delete that one. Come on. Yeah, that's it right here. So either of those will work, but this is the better one for it. So we're waiting for it because as you can see, your retracement is just an A, B, C, then a D move. Let me put it back on there. The D move, it hits it right there when it hits the 1.146 level. And so that's when we look for the retracement right up here for it. So once it's that, we go back and put it on the set trade. And how this trade works is when price goes up and hits the 50%, which is that first green line, you have your exit at 38%. So that one was said and done right there. So that one would have been a great trade right there, looking for a good little 2.5 point profit. And then how it continues to work is if price doesn't go down and hit the 38 after hitting the 50, you have another entry at the 61.8, move the exit to the 50. So you'll get a little bit of profit. And then the third final one is if price continues to go up and hits the 76.4 level, you get in with double the amount of whatever your first entry level is. So if you have one contract, you'll get in with 2 contracts up there. Then the exit is just below the 61.8 level. So the 61.8 contract gets you 1, 2 ticks. The one contract here more than makes up for this contract, and then the other contract you have up here is going to be straight profit for it. So that would have been an easy trade. It didn't even go up that high. It went up to the 50, and that was that. So this is what we're currently looking at, is if price continues to go down, we're looking for a short trade in SP 500, but this thing may not materialize. It needs a good little push down, and then even if it does, we get down here, we have 2 different retracement trades, another one down here, another one down here. So there's a bunch down here. So anyways, going over to the, take my notes away from there, the Russell 2000 right here. Right now, this is just price is just in a consolidation phase from it right here. You can see you had that run up. Now it's just consolidating right here. They have another video I need to post called Spotting Trends, and it's just how the market moves every single time. Basically, it goes from, like, you'll have a basing pattern right here. You see that consolidation, basing, same thing. And then it goes up to a trend, and then it goes to a basing pattern, which you have right up there, down to a trend right there, over to a basing pattern consolidation right there, up to a trend, right there. And then right now we are in a basing pattern. So we could take that bigger one. It is kind of a bigger one for it. We could consider that a base and that a trend, and then you have a trend and base. But as you can see, it's not really going either way. You know, it's not easy to tell. If you zoom out, you can easily tell which way it's going. Like obviously you can say from like down here to up there, that's easy. That's a trend channel going up. Then you have the small basing pattern right there. And then we have a trend channel going down right here. Then we have a basing pattern right there, or consolidation, what do you want to call it. Change this thing. And then you have a clear move up right here. So there's your trend channel. And now there's nothing clear within this right here. So when it's not clear, the easiest thing to call it is a basing pattern for it, because you know you did have a little bit move down here, but now you know it hasn't even made any from this level to this level right here. It hasn't made any new highs or new lows. So it's pretty safe to say we are just in a basing or consolidation pattern right here before price decides which way it wants to move next. And so this is just that trade here from yesterday where it's the triangle trade. There's your first point, second point, third point, fourth point. So you put the semaphores 1, 2, 3 right there. So we had the breakout. There it was right there. I got in like a little bit better right around there, like I was talking about from the S&P 500. And now just wait to see what's going to happen. You know, this looks like obviously this has been kind of the this level for whatever reason has been kind of the bottoming level. This is where price hits this level, it gets a push back up for it, and that's what currently is happening here. So hopefully in the next couple days we get a push up over here, and see what this looks like. That is, it's right on 38%. So yeah, it could be an A, B, C, and D trade. D would be up here. That's what I'm hoping for this one. If not, we get a big push down right here. You have to get in somewhere down around here and have to exit somewhere right around here for it. But that's what's happening for the for that trade setup. Now we do have another one. See this one right here? There's 1, 2, 3, 4. So we do have another potential movement to the upside right here. We take points 1 and 3, just highlight them right there. Take the inside pitchfork. Go right there. Right there. Right there. We can see it has not broken above it yet. So we do not have a live trade up here yet. And see, look how close it got. Got that candle bumping off of it, and that was the resistance. So it's not a live trade setup, but if price does close above this green line right here, then we'll have another similar exit to where this one is up here, but that one isn't live yet. Going over to Dow Jones. Main thing about Dow Jones today, we did have a triangle trade today. There's first point, second point, third point, fourth point. Price closed above it right here. You can see you could have gotten it slightly better right around here, that level right there. And then, then one candle pretty much made it all up. And of course, I missed this trade, but that would be a nice 115 tick trade there on the Dow Jones that lasted, about 15 minutes. Since this is obviously the 15-minute chart, and that would have been a real nice one for it. Hold on a second. What is this? Down there. All right. So that's that one is said and done, but that was the best trade of the day by far here for that one. We do have a potential kind of like the S&P 500, an expanding triangle trade. You can see from right here, there's point 1, 2, 3, 4 all the way up there. And so we take points 2, 3, and then potential point 4, which I assume will be this one up here when the semaphore tries to form. And so when it does, it's already in a short setup right here. It's just I'm not taking it because the semaphore hasn't confirmed it yet, because I have seen it before where, yeah, price has come down a lot and it has potentially signaled it, but price could rocket up, create a new high up here, and then that would make it this trade invalid since that semaphore didn't form and would have to move this over there and looking for a close below the median line for it. And so, probably what's about an hour and 20 left in the major trading time today. If the symbol 4 does form and, prices around here or something like that, definitely look to get in right there, since this potentially would have been the area, the initial area to get in with. And then, you're taking it down to whatever this is. The only thing I like about these type of setups is, since you have that sliding one that's moving up, the more time that goes against you is the less profit you're going to have in this trade. So like, even if, a symbol 4 formed on this bar, or is it symbol formed right there, the price is still going against you. So when, after the next hour and 19 minutes, when the trade's really, the volume settles down, you go into the overnight session, and there's not a lot of price movement for the next 6-7 hours. I mean, look at this. This is going into, let's see here, Tuesday, I guess, the nighttime. And look at that, even before, there's 3:30, 4 a.m. right there. Now you're looking at a loss no matter what happens for it. So this really isn't a trade that I'd be looking at taking, even when the symbol 4 forms. The only way is, like, say the symbol 4 forms, we'll get a big push up right here going into tomorrow, and you can take it. But it's still not just that good of risk reward. So this is probably what I'm gonna sit out on. Here we had, I think, talk about this one yesterday. Did I? There's another expanding 1, 2, 3, 4. 2, 3, 4. So when price closed above it, one of these, not sure if this for some before this orange one was formed down here, but probably somewhere along here it was. You just take it up to there, and there's an easy trade for that one today that, of course, I missed. All right, now oil, of course, the prediction, there's a lot of crap on here, so I'm going to delete some stuff off here, but my prediction was yesterday, saying looking for a big move down. And of course, what happens is we get a 2% move up. So of course, that's what always goes. So let's take what, I'm going to delete, which one do I want to delete here? I want to keep this one because that's the new one I have on. It's all right. We'll just start with this one, see what it looks like. Okay, so that is the current one that it's in. Okay, yeah. So let me show you what also is happening in oil. So this was the 1, 2, 3, 4. So 2, 3, 4. Going to, let's see, 1, 2, 3, 4. So this is the new one, I think. Yeah. So here's the one that just happened either late yesterday or today by the time this red one formed. So this is another triangle trade. There's 1, 2, and then 3 and the 4 are within the 1 and 2. So there's the triangle trade in the red semaphores. So we had a close above it right here. So here is the entry line. Get to that. Here's the entry, well, that one, we'll say this candle right here, just because it for sure closed above the upper green channel for it. So the one of the targets we have for it is way up here at this one up here. So now we have conflicting signals here within the market. 2, 3, 4. There we go. So we got that one right there. Delete that. Then we also have, let's see here, 1, 2, 3, 4. I think this is the one we were in yesterday though. 1, 2, 3, 4. 3, 4. Let's see about this one. So I believe this is the one I was in. So 1, 2, let's see, 1, 2, 3, 4. So we have price book above it right there. So yeah, that's the original one from yesterday, I believe, going up over there. Then there's also one here today, a shorter term one. I'll show you. It's one 1, 2, 3, 4. I mean, there's been just tons of trade setups right in here. That's not the one I wanted. This is what I wanted. 2, 3, 4. So we have another long setup right here. See, there's 1, 2, 3, 4 right there. The 3 and the 4 within the 1 and 2. We had the close above it. Price never hit down here, down below. And so this is another level we have where price could potentially go up there and hit right there for that one. So we have those two of those long ones that could go up and potentially be hit. And then this 1, 2, no, that's not it. We have this one, 2, 3, 4. Yeah, that was the one that, price is just bouncing off all this. So then we have, yeah, that's the same one we just looked at. That one went to the upside. 1, 2, 3, 4. For that. So there's, several new long ones that have developed from it, from what I was looking at yesterday, which was the short trade. 2, 3, 4 right there. So 1, 2, 3, 4. And this is the one that closed yesterday. The one I got into, of course, it's the wrong way. There's the entry level. There's where I got in. I think it was right over here on this bar. Got in right there. And so we have, potentially it coming down over there. If price continues to go up and it's this upper green line, looking to get in at 2 contracts up here, and then take it down somewhere like right in here. It's just something like that. So I'm for it just because I got in at a good price. I'll have to take it down, as close as I need down here to this entry level target. Have it slightly like right up here to ensure I get out of it for a pretty decent size gain. In fact, I may only need to get in for like 1 contract. Because say price goes up there, I get right there. I'd only need to take it down to about right there. There's 220 ticks, and then that's 60. So that'd be a real nice gain right there. So that's another reason why it's so important of getting in, using such a getting in at a better level than whatever it gives to you. But you can see there's definitely in the oil market, there's a bunch of conflicting signals for it, where we have a couple longs to the upside, and then that big short one down here to the downside. So one of them's going to play out where either longs go up there and get hit, and therefore it creates the secondary short we have to take for the short setup, or the short's going to go down there and get hit. And while it does that, then those long setups would have to get in at the secondary level and go up to like where the original entry point is. But when I was getting a trade yesterday, those other ones hadn't formed either. Well, I know one of them hadn't formed, the other one may have. I just didn't see it, which happens from time to time. So you just kind of have to, pick which way you want to go for it. The one thing the long sides do have for it that short doesn't have, so you can see down here in the MFI chart, which is, the money flow index, it just shows what the average is, money, coming in and out of it. It is in the completely oversold level down here, right there. So we're looking for eventually, a good pop up. Now, what this indicator doesn't show is when it's going to happen or how much of the turnaround you're going to get, because you can see from like right here, when price went into overbought territory up there, it didn't take too long. I mean, it hit about this candle right there, 1, 2, took about 3 weeks. Then you had that big drop down right there where you had a big retracement, and you've had a bunch ever since. So right now, it started went in about 2 weeks ago, 2.5 weeks ago. So 1, 2, this is the 3rd week, 2.5 weeks into it being in completely oversold territory. So we're looking for a good, eventually, pop up from it. Now, it doesn't mean it's going to happen immediately, since sometimes it may not even happen. I've seen these go way down over here, and price continues to go down. It'll pop up in that territory a little bit, but price continues to go down. Then eventually it'll come back up. But it can. That's why this indicator is just. It's kind of a guide. I don't go by it for to take my trade decisions off. It's just like a barometer of what to look for, and it's the best thing I found for it. So that's oil, and then last but not least, the Nasdaq. 1, 2, 3. Yeah, so this is an expanding triangle trade right here. See, there's 1, 2, then we have a lower low, and then a higher high right there. So putting that on points 2, 3, and 4. And price closed below it right here. See that? And that's where your entry was to get in. Price has not hit the yellow line down here, which is the 1.5. So that's where the target is. If price continues to go up and hits this upper line, that would be where the next entry would be. And then you would have your exit just slightly below the midline, somewhere like right in here, something like that. So they give a nice gain. The only way I'd get into this is if the price went up there and hit that, then I'd get into it looking to take it down somewhere, right in there-ish. But I'm not looking to get short right now just because I'm also in the Russell and oil as well. So look at Bitcoin real quick. Bitcoin today. Let's see yesterday's movements for it that I was showing. Looks like a blowout today in Bitcoin from the extension levels. Yeah, so far it has been. Looks like price could be coming down into the extension level high for the day, but overall good day for Bitcoin, going on up. There's an expanding triangle trade right here, 2, 3, 4. So that's a target we have for Bitcoin right up here. This yellow line, somewhere around 39,450-ish, something like that for it. So still looking for a little more upside here in the intraday chart for Bitcoin. So anyways, those are the trades for today going into tomorrow. Thanks. Have a good one. Bye.